Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here. Today is the 20th of December, 2019. It's a Friday. TGIF, guys. Now, anyway, here's the thing I want to get to. Let's open up Zero Hedge. Now, open up the charts. Well, charts are open. Germany, their economy is contracting right now. And the stock market right now is melting up. We have the everything bubble, I'm going to tell you, the everything bubble is on the other side of the fence. Well, you might wonder, what do I mean by that? Well, it used to be we only had one economy. That was the economy, What they've done is they've created a distinct, sharp separation between the economies through quantitative easing. This is what it's done. This is what quantitative easing has done. And this is what it'll continue to do as they go into new versions of quantitative easing. Quantitative easing doesn't bring on a hyperinflation. What it brings on is a stark contrast in the economy between the have and the have-nots. It generates two economies, an economy of Wall Street that pumps up the big banks, pumps up the stock market, pumps up the bond market, pumps up all these markets, including the real estate market, in the bubbles. It's a bubble machine. It makes these bubbles. While the rest of the economy shrinks. It creates a stark dividing line between the two economies. And so, because one part of the economy is getting strangulated for money, for capital, the Fed realizes that that's the largest part of the economy. It's like the tail wagging the dog. The largest part of the economy is getting slowly drained. And so they can't borrow money if they're drained, And so the banking system that normally provides money to in other words, the middle class is going down the tubes. And so here in Germany, we have the economy turning over. This is a huge economy in Europe, the German economy. And let's take a look at some of this. German industrial production today, This last quarter, it's down 5.3%. This is starting to look like the crisis of '08. Which we see this stark drop-off in the crisis of '08. But if you notice something, when the lead-in period of '08, they started from a higher position, up around maybe 6%. This time, they started at a lower position, about a percentage or maybe a percentage and a half point lower when they've started this drop, this precipitous drop. Now, take a look at German new car production. We can see it's exceeded the low of 2008. We see the 2008 drop here, this large swoop right in the middle of the chart. And we see right now we've already dropped below that on German new car production. So it's quite literally falling off a cliff, German new car production. Germany's GDP, you know what they're hoping for? They're hoping for stagnation, if you can believe that, because they're going to get negative numbers. So Germany is contracting. Germany's going into a recession. It's expected, right here, it says it's expected that Europe's largest economy will contract by 0.1% in the October through December period. So they've had this is a quarter of contraction. The numbers haven't come in yet, but it's going to be a quarter of contraction. Germany will drag an awful lot of Europe down with it. Germany's in a recession, and it looks like it's going to be officially declared very, very soon. I want to talk about this crisis a little bit before we move into the charts and take a look at the different things like oil and everything else, silver and all that. This contraction, this total meltdown of all the world's fiat currencies is going to happen in stages. And the first stage is actually a melt up, where the dollar can actually gain some value. This is just before the bubbles start to burst into deflation. Then the Fed is going to react. The world's central banks are going to react to go into what I call the Great Print. That's going to lead to a lead-in phase to hyperinflation, which is an acceleration. It's going to accelerate everything, the printing of the world's central banks. And this is going to be a lead-in period that's going to last from maybe 6 months to 2 years before we actually have the hyperinflation. And the real hyperinflation, worldwide hyperinflation, will turn the world into very similar to a banana republic. The whole world into a banana republic. Because, quite literally, we've never had a worldwide hyperinflation. Sure, we've had it in some places here and there, and they always have something they reach out to, a value to use in exchange, to barter with, to use in a marketplace. Generally, it's the dollar they reach out to, like in Zimbabwe, or if you have these countries that go into hyperinflation, they reach out to a currency that does have value. In this case, it's going to be all the currencies of the world. All the fiat currencies are going to go down. So what do they reach out to? Well, the answer is obvious. There's only one place to go. If your fiat currency is turning to dust, you've got to put your faith and your money into something that's not turning into dust, something that's going in the opposite direction. Gold, silver, and crypto. That's where they're going to go. And these are the asset classes right now that are being crushed. Well, not completely crushed, but damaged. Let's take a look at silver today. It's up a little bit today. We're at 17.18, and it's catching a little bit of a bid today, up 15 cents on the day. So that looks good for silver. Gold is it's bouncing along. It's not catching quite as much of a bid as silver is. Gold's 14.79. It's up 60 cents. Gold's in a very tight, narrow trading range here, between 14.74 and about 14.80. So it's on the high side of that trading range it's going along in right now. Let's take a look at cryptocurrency. Cryptocurrency's been smashed but good, and she's down really low right now. 191.8 billion. Bitcoin dominance is 68.1%. It's just barely holding its head above $7,000. $7,204 for Bitcoin. We're looking at Bitcoin Cash at $199 and Litecoins at $40.30. So Litecoins went back above $40 again, And so the cryptocurrencies are holding their own right now in a very bearish market for cryptocurrency right now. Very much bearish sentiment right now. But you know how quick that can flip? Let's take a look now at the Dow Jones, and we're seeing this melt up. And it's continuing. It's up 96 points on the day. Every day it's up. We're always breaking into new highs. Today is 28,475 for the Dow. And the Dow is going to continue to melt up as long as they keep pumping this cheap, easy money in. But while they're pumping up the Dow, and while they're pumping up certain parts of the financial system, remember that division I told you about earlier in the show? That other side, in other words, the dog, they're pumping up the tail, and the tail wags the dog, and what we have is the dog is suffering. He's losing everything, and this is the biggest part of the economy. Just Wall Street. Wall Street's getting it all, and that's what's happening with the stock market right now. They're getting it all, and so it's going up. Yeah, obviously it's going up, but the rest of the general economy out there, Main Street, is being squeezed. They're putting the squeeze on everybody. Let's take a look now at crude oil. $61.30 today. It's up 8 cents on the day. Crude oil's been catching a bid for a while now, and it's been a slow increase, up through the 50s, and now it's into the 60s. Soon it could be heading for the 70s. Let's take a look at the dollar index today. Not the dollar index. Sorry, guys. The bond market. And, we're seeing a little bit of rise in yields. It's about 1.6 basis points on the U.S. 30-year, 2.36 on the U.S. 30-year. U.S. 10 years at 1.93. It's up 2.3 basis points. We're looking at the whole long end of the yield curve rising a little bit, but it's not rising a lot, but some. The lower end of the yield curve is remaining more unchanged. Now let's take a look at the U.S. dollar index. We see a dollar that's starting to ride high and ride strong again today. Now, this is a little bit unusual, the fact that the dollar's at 97.61, and we're also seeing a rise in the price of gold and silver. The same time the dollar's rising. That's a little bit unusual. Generally, when the dollar goes up, gold and silver goes down, generally speaking. But today, we're seeing this abnormality where gold, silver, and the dollar's all going up simultaneously. Thank you guys for listening to this report. Give me a thumbs up, and we'll catch you guys in the very next show. Bye-bye.